Hi, welcome back to C Morning Show, where you are with me in Rachmat. From winemakers in California to startups across the Atlantic Ocean, companies are scrambling to figure out how to manage their finance after their bank, Silicon Valley Bank, suddenly shut down last week. The meltdown means distress not only for businesses but also for all their workers whose paycheck may get tied up in the chaos. The Bank of England and UK Treasury said early Monday that they have facilitated the sale on the bank's London-based subsidiary to HSBC, Europe's biggest bank, ensuring the security of $8.1 billion of deposits. It's been a week, and the story continues. To further talks on the matter, joining here with us today is personal finance enthusiast Dani Rachmat. Welcome to the show, Mas Dani.
Thank you for having me.
Now let's go with our first question. So, what happens? Last week we heard about Silicon Valley Bank, and what happened last week? Where are we at now? And then what exactly happened that we are at this point right now?
Yeah, actually the SVB issue is very interesting because many people thought that this will affect our banking system worldwide. But then when I see into the issue, when I read on about the issue, I thought that this issue is a very localized issue for this SVB, and then the other bank. What was the other bank? Signature Bank. The Signature Bank. The matter was because the investment that the SVB decided to did before, and then now they have to pay their customers when they want to withdraw their funds and everything. But then SVB don't have the money because their money is tied up in the U.S. Treasury bonds, which is in the very long-term tenor.
All right, so you're saying they put their money investment on the Treasury bonds,
Yes.
and then it's tied up for the long terms.
Yes.
So what's the problem with putting the money on the Treasury bonds? Like, people think bonds is a safe bet to put your money on. So what happened there?
Yeah, actually, government bond everywhere is the safest bet in investment. When you are investing your money, government bond is the safest choice that you can have. But then, the safe option is if you plan to put your money until the maturity of the investment. So if you buy the 30 years of treasury bonds and then government bond for 30 years, your money will be safe for the next 30 years until the maturity. But then if you want to withdraw your money before, there is risk there because during the tenor, the bonds will be able to be traded in the secondary market. In the secondary market, when interest rate goes up, the price of your investment will go down because those treasury bonds have a fixed interest rate, right? Fixed coupon.
Oh, okay. So they bought it way early on before the interest rate hike, and then so from what we get from their website, they claim they have over $212 billion in assets,
Yes.
and then they already loaned about $342 billion total in clients' funds. So how much money should a bank put on the bonds comparing to how much should they lend?
Yeah. From the data in the common practice in US and also in Indonesia from OJK data that bank usually put only around 25% of their asset in the government bonds.
Okay,
in the
so
long-term
quarter
government
from
bonds.
okay.
Yes, but then SVB, from what I read, they put more than 50% of their asset into this US Treasury bond with long tenor. So that is the problem come from.
Okay, so they have problems. They put too much
Yes.
at the bonds, and at the same time, the bonds itself, the value is lower, and then because of the interest rate hike that's happening in the U.S. and then people are taking out their money. Why people were taking out their money? How much money are we talking about?
Actually, when talking about SVB, their clients mostly are startup companies and their owners, right? And then FDIC only guarantee around $250,000 for the deposit for each customer. But then the customers of the SVB, in average, from the data, they said that the average of the deposit was around $4 million per customer.
Okay.
That it is way beyond the
$250,000 that guaranteed by the FDIC.
Yes. And then when one customer withdraw the money, and then maybe 100 customers withdraw their money for million to pay their employees in the startup industry and everything, so that they have to be able to do that, right? How they should do that? They have to sell the asset that they have in the U.S. Treasury market.
The bond.
Yes, right. The bonds. And then when when they bought in around 2019, 2020, early to 2020, the interest rate was very low, only 0.25% in US, right? But now the interest rate is already 4.75. So the bond price is already so low now. So they have still to pay their customers, and then they make loss in their investment. They try to raise the financing to to fill in the gap for their loss, but then market already sense that. When market know what SVB is doing, they got panic.
So that's the reason why everybody's trying to take the money at once, and then that's what happened over the weekend last week.
Yeah.
And then people were panicking. Now, is this our Silicon Valley Bank and Signature Bank? Is it an isolated problems in the U.S. bankings, or are we going to see a domino effect that happening throughout the country?
Yeah, thanks to Biden administration that they already trying to save all the deposit, right? But then from the issue itself, I think it is quite isolated because when I said earlier, the majority bank in US, the conventional bank, they only put 25% of their asset in the US Treasury bonds, as well as in Indonesia. But then for Signature Bank, it is also the business is in cryptocurrency, right? So I think that once the US government already saved the deposit, so that hopefully we don't see this issue will spread to other
banking system.
Banking
All right,
system.
so we have a soundbite here from President Joe Biden addressing that matter. Can we roll that soundbite?
Hey, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks and the impact they could have on jobs of small businesses and banking system overall, I instructed my team to act quickly to protect these interests. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers.
Now, I like that. He doesn't use the word bailout, but at the same time, like you mentioned, so the bond value is right now is, I don't know, 30 cents to a dollar from where they bought it. But like it was what it sounds like from what President Biden just mentioned, it seems like the money is still good, the deposit's still there. So it sounds like SVB doesn't need to get that more funding at the same, because they already value whatever bond that they value at early 2020 or 2019 at the same value that they bought it. And so, is it a bailout?
Sounds like it. Sounds like it. But maybe President Biden says what he said just to give comfort to U.S. citizens and to many people that have deposit in other banks. For $4 million deposit against 250,000 US dollar deposit is very big, right, compared to what is insured. But then I believe that Biden administration doesn't want that panic spread and everybody rush their banks, even conventional banks. So I think he did what is necessary.
Right. So it's interesting. So on Thursday we saw the stock people start lining up. They're taking out their money, like you mentioned. You know, if we only talking about like 100 customers, which is taking about like 4 million each customer. So it's almost $500 million just from those people alone. So and then on Friday they get suspended or they cannot do any transactions. So everybody's panicking over the weekend. And then on Monday, right away, FDIC took over the bank, took over the assets, which is, I think, on the if we keep going with the soundbite from Joe Biden, he mentioned that so all the management gonna get laid off. So how necessary is it? How necessary was for the government to take over the bank right, the way they do it last weekend?
Yeah, I think that governments should do what they do. I mean, as soon as possible, so that it gives confidence to the banking system as a whole. Because the problem that we are facing right now is quite different when we look back at the 2008 crisis. Because in 2008, I think that all the banks involved in the subprime mortgage businesses, while now the one that doing this kind of practice is only SVB and the Signature Bank, only both two banks. While the other banks, they're still practicing the conventional and quite conservative way of business, of banking business. So if they didn't do what they do now, I think that people will get panic, and I think it is already sufficient to give comfort to people.
Now, the past week, we've been seeing banks all around the world. It seems like customers panicking, like the stocks numbers going lower and lower. Actually, President Joko Widodo actually mentioned something about the matter on addressing situation of potential domino effects of the Silicon Valley Bank. We have the soundbite on that one. So this is what President Joko Widodo has to say about the SVB matter.
Yang lalu, hal-hal yang tidak terduga muncul. Ada kebangkrutan bank di Amerika, Silicon Valley Bank. Semuanya ngeri begitu ada satu bank yang bangkrut. Muncul lagi, belum 2 hari muncul lagi bank berikutnya yang kolaps. Signature Bank. Semua negara sekarang ini menunggu efek dominonya akan kemana.
Every country is waiting what's gonna happen, what's the domino effects, how will it affect other countries, including Indonesia?
Yeah, I can say for other country, but when we are talking about Indonesia, yes, maybe we are waiting what kind of effect that we will see from this SVB bank. But then again, when we see the OJK data, we see that Indonesian banking practice is quite conservative, and we are not allowed to to provide loan to these startup companies, unlike the SVB bank, because SVB bank, their clients are startup technology companies with relatively new financials and everything, that the condition is not yet stable. But then in Indonesia, the regulation are in place so that when we banks, myself is a corporate banker, so when we lend to the companies, we have to look at the financials and we have to analyze everything. And up until today, it is very difficult to provide loans to these startup tech companies.
Oh, really?
So the funding for startup in Indonesia mostly coming from the VCs, right?
Right.
Yeah, not from banking. So for Indonesian banking customers, you can rest assured that your money is safe in the banking industry's hands.
All right. Oh, that's interesting, but that's another discussion. Where does the startups in Indonesia actually put their money? So, but how fragile is the U.S. market compared to Indonesia? Like you mentioned, we have regulation in place to make sure everything goes well.
Yeah.
Like you mentioned, you have a stress test, I guess, for the corporation. Like how well can you maintain your financials? So how fragile is the U.S. market?
Speaking of the fragility, I think that U.S. market is way bigger than us and way stronger than us, right? Because they're a rich country, unlike us. But then again, with the size of the economy in America, they have the freedom to try to the new markets and everything. So that is why they can lend to the startup companies and everything. And actually, new market that we are seeing now is coming from America, right? For the startup tax and everything and financing. So maybe the risk is coming from those untapped water that we still have not seen yet in the past. But then for Indonesia, since we are still very small, we are very, very careful when looking at these new markets. Yes, the business is there for the startups, but then when the financial is not sound enough, we don't dare to explore this new market. So I think the risk is higher in US, but then again they have more what is it, experience in this kind of market.
Right. So now, based on the latest situations, what can venture capitalists or startups in Indonesia, or even retail consumers, learn or see what about financial institution, and how should we invest our money? I mean, like, is bonds still okay? I mean, I know there's recently, yesterday, there's the news about like one of the pension fund that was put in on penny stocks, which is now being questioned. Like, what's your take on this?
Yeah, actually, when it comes to investing, the rule is very simple. Just buy low and sell high, or buy high and sell higher.
Okay.
Don't do the opposite, because when you do the opposite, you will make loss. And for this SVB case, that what we can learn is that the bond market, the bond is still the safest option if you want to put your money until the maturity date. But then again, bond is very affected by the interest rate movement.
Okay.
So if you want to buy bonds, if you want to invest in bonds to secure your money, look at the market. How is the interest rate? When interest rate low, I think that it is not the safest option to invest in bond. When the interest rate is low, the option is going to stock, because stocks thriving in the low interest rate regime.
Okay.
But then when interest rate goes up, bond market will drop, and that is your time to enter into the bond market. While stock market, as we can see right now, when interest rate is very high, stock market fell.
Right.
And that is our time to enter to stock market.
That sounds like it's a long discussion. We need another segment for that one, so we'll do it next time. But for now, let's take a break. But we will have more on updates from around the world. Thank you so much to Mas Dani on the show.
Thank you for having
Stay here on C Morning Show. We'll be right back.